Delinquencies in mortgages are starting to rise here in the United States, which does go along with some of the negative economic indicators that we've been talking about on this show, including rising inflation, record consumer debt, rising credit card debt. Now you take a look at the percentage of Americans who have mortgages who are delinquent either by 30 days or even worse, 90 days. And we are trending in a bad direction. However, I want to be clear, we are not experiencing a housing market crash. Although we are seeing houses remain on the market for a far longer period of time, we're starting to see some price cuts. But let's talk a little more about the delinquencies. So the delinquency rate for mortgage loans on 1 to 4 unit residential properties increased to a seasonally adjusted rate of 4.44% of all loans outstanding at the end of the first quarter of 2026. And that's according to the Mortgage Bankers Association National Delinquency Survey. So when we talk about all mortgages, all loans, I want to be clear that we're not just talking about residential real estate. We're also, in some cases, talking about commercial real estate, right? But in this case, mortgage loans on 1 to 4 unit residential properties. Now, a 4-unit residential property is considered commercial. Usually there is a landlord who is, charging tenants for their units. But let's get a little more granular with our research here. The delinquency rate, by the way, includes loans that are at least one payment past due, but that does not include loans in the process of foreclosure. But we're going to get into foreclosures as well. So the delinquency rate was up 18 basis points from the fourth quarter of 2025 and up 40 basis points from a year ago. But what about loans that are considered seriously delinquent? And that's more than 30 days late. The non-seasonally adjusted seriously delinquent rate, the percentage of loans that are 90 days or more past due or in the process of foreclosure, was 2.03%. It increased 18 basis points from last quarter and increased 40 basis points from last year. So I don't know. I mean, Trump wants to know, are you tired of winning? Is this winning? Please point me in the direction of where the economy improved under his leadership, because this is not an improvement. And delinquencies were mostly concentrated in 2 different types of loans: FHA loans and VA loans. So VA loans, of course, are mortgages for our veterans. FHA loans, for those who don't know, those are loans where the person looking for the mortgage or who has been given a mortgage doesn't put 20% down on the property. They put less than 20% down, but as a result of that, they have to pay for insurance. I don't recommend doing that, guys. I know people really want to buy homes. I don't think you should agree to a mortgage unless it is a conventional mortgage where you put 20% down. And I know that's really difficult for most Americans, but don't find yourself in a situation where they call it house poor, where you're literally putting all of your resources in paying your mortgage. And that's gonna happen if you don't have a nice 20% down payment on the home at least. Let's take a look at this graph because it's gonna help you understand what I'm talking about a little bit better. Oh, actually, no, let's go back. I apologize. I want to talk about the foreclosures. So the good news is that foreclosures are still very low. We don't have a ton of foreclosures happening right now. The problem is, though, that when you look at these numbers, there's every indication that we're trending in a bad direction. So the percentage of loans in the foreclosure process at the end of the first quarter of this year was 0.64%. That doesn't sound like that big of a deal. However, it was up 11 basis points from the fourth quarter of last year, 2025, and 15 basis points higher than 1 year ago, which shows that the rate of foreclosures is not only increasing, but also accelerating. And again, delinquencies were mostly concentrated in FHA and VA loans. And I want to show you this graph, which was put together by the Mortgage Bankers Association. What it does is it shows you the different types of loans and which ones have the most foreclosures. So the total seasonally adjusted delinquency rate for conventional loans, shown in orange, actually decreased 14 basis points to 2.75% over the previous quarter. However, and this is important, delinquencies did rise compared to the previous year. So, make of that what you will. But by contrast, the total FHA seasonally adjusted delinquency rate increased 36 basis points to 11.88%. And the total VA seasonally adjusted delinquency rate increased 39 basis points to almost 5%. That is not good news. And so, again, we are not experiencing a housing market crash, but what we are seeing in every element, every facet of our economy, every indicator shows that we are doing worse. We are seeing rising inflation. We're seeing a rise in unemployment. It does show in some of the jobs reports. I don't think it shows the full extent of the job losses, to be quite honest with you. And then you're also starting to see increased delinquencies when it comes to mortgages, and even an increase, as small as it might be, on foreclosures. Then you couple all of that with the fact that you have rising credit card debt, record consumer debt. We are not in a good position. And it's so important, guys, to understand that our current political system is not working for us. Okay, the Democrats aren't helping us. The Republicans, certainly, they're in charge. They're not helping us. The entire focus of the Trump administration has been on foreign policy lately, and we are suffering the consequences of that. If it was foreign policy to keep the United States safe or to benefit the United States, that might be one thing, but that's not what's going on here. We are fighting a war on behalf of a foreign country, and we're getting nothing out of it. In fact, we are bankrolling it, and our federal government is going deeper into federal debt as a result of that. Just some thoughts to keep in mind.
Starting something new is terrifying. When we launched our Shop TYT store, I was drowning in what ifs. What if no one buys anything? What if the site looks amateurish? I almost talked myself out of it, but I took the leap anyway, and I'm glad I did, because Shopify made it incredibly easy to turn those what ifs into real sales. Shopify is the commerce platform powering millions of businesses globally. Get a load of this. It handles 10% of all US e-commerce. That's amazing. It's behind brands like Allbirds, Gymshark, and yep, our very own Shop TYT. They give you one all-in-one dashboard for inventory, payments, and analytics, so you're not juggling 10 different logins. Need product descriptions? Shopify's AI tools crank out copy and even polish your photos, and mine needs polishing. And if you get stuck, their 24/7 support team has your back. So if you got an idea for a business or a side hustle, stop what-ifing. It's time to turn those what-ifs into with Shopify today. Sign up for your $1 per month trial at shopify.com/TYT. Go to shopify.com/TYT. That's shopify.com/TYT. Every time you ring the bell below, an angel gets his wings. Totally not true, but it does keep you updated on our live shows.